Hey, Steve, Happy New Year. We just wrapped up our 77th consecutive index call. And Steve, as you know, we actually got to do this one in person in Orlando, which was awesome. So let's jump straight into some of the big themes from the year. So we saw record results across almost all sectors for the full year. Managed services was up 16% year over year. And with that segment, ADM was up 40%, and engineering was up an incredible 170% year over year.
Yeah, great. Well, first, Stan, it was great seeing you live as well. And you're right about the market. We've just seen record results across the managed services sector. In 2021 for the full year, we had over 47 billion of ACV awarded. That's adding almost 20 billion per year of ACV from the averages we saw between 2010 and 2018. So you're just seeing this incredible market growth. And as you and I've discussed previously, the pandemic was really the accelerant for software spend and really technology spend in general. But you're right, ADM and engineering were both up significantly, both driven by tech modernization. We saw almost 2 billion of ACV awarded in engineering alone this year, almost triple the value from any previous year. And ADM now accounts for almost 60% of the ITO ACV with over 14 billion of ACV awarded. So just fantastic results.
So even with the really strong results from 2021, we are watching some potential headwinds in the market. Wage inflation is a topic we're getting a lot of questions on. We saw a 4 to 7% increase in project rates last year. But so far, Steve, prices in managed services are pretty much holding steady.
Yeah, you're right, Stanton, they are. And our Chief Data Officer, Kathy Rudy, really did a great job talking about this on the index call. And I think she really highlighted the differences between managed services and T&M pricing, so essentially time and materials pricing. We do see rates increasing for time and material projects, especially for those projects that need really critical skills. So think of cybersecurity, analytics, cloud architects, etc. But in general, we don't see a broad brush increases in rates across the board. So as we said on the call, we do see maybe 4 to 7% increase for those skill sets. I think that will continue into 2022. But I think given the longer term nature of managed services deals, we aren't seeing those rate adjustments really carry through. I think the interesting thing, and I think this came out of some of your research, Stanton, is we've seen fewer deals that have a cost of living adjustment or an FX clause included. Now, these clauses were included in less than 65% of the deals compared to greater than 90% just a few years ago. Now, I think it's primarily related to the shorter deal durations, but I think it will be interesting to watch as we go forward.
Another potential headwind, Steve, here is attrition. As you know, we're near or at all-time highs. Providers are pulling just about every lever they can to mitigate the attrition risk, but we're, I think, still likely looking at a few quarters until things improve.
I think it's going to be more than a few quarters, Stanton. I think we're seeing tremendous growth in digital, and we've seen increased spend in ADM and engineering. And this demand side pressure, I think, is just going to continue for the next several years, which I think is going to put pressure on the supply side of the market. Right now we're focused on hiring, training, retraining, and a lot of that is freshers. But I think a lot of the work that we see really requires more expertise. That's really more than the 2 to 3 years of experience that we're hiring into the market. I also think the startup community across the globe, but especially in India, will continue to ignite the minds and pull talent out of some of the traditional IT and engineering organizations. So I think it's going to be some pressure. But, I also know that this is your territory. So what's your perspective on this?
Yeah, I think it's a couple of things, Steve. So number one, as we've talked about a lot of this imbalance is happening because hiring slowed down so substantially during the pandemic. It picked up in a big way in the fourth quarter of 2020. And so I think we're going to start to see a lot of those folks start to come online. I agree with you that a lot of the gap that we have today is with folks sort of the 2, 3, 4 year experience. But I think a lot of those folks that got hired in are going to ramp up quickly. And then I also think we're going to see a bit of a slowdown just generally in the economy with rising interest rates, rising inflation. I think things are just going to sort of calm down a bit. And I think that that's going to sort of solve that imbalance. It's not going to be perfect. That's the reason I think in 2 to 3 quarters, I think we'll largely be over this hump. There's still going to be a big demand for highly in-demand skills, the ones you talked about, but I think the worst part of it will be over. Okay, Steve, let's turn to M&A. Providers used M&A in a big way in 2021 to acquire capabilities in high growth areas that we've just been talking about in cloud and engineering and security. And in doing that, we really pretty much smashed every record in terms of M&A, in both the number of transactions and in the value of those transactions.
Yeah, it's interesting because we typically track, call it 275 to 300 acquisitions a year, with most of those really on the as-a-service provider side, your hyperscalers, your infrastructure as a service, your SaaS as a service. I think the interesting data point we noted this year was really just the number of deals made by the traditional managed service providers. So within that space, we saw over 125 deals with over 13 billion of spend. Now we all know Accenture. The joke is Accenture acquires one a week, and they did account for about 40% of the volume. But we saw activity across really all of the large players. So consolidation of services and engineering led the way, but we're also seeing organizations acquire MarTech and software capabilities. I think it's just interesting how much that space is growing. We also saw really heightened interest from the private equity firms in IT services sector. So within this space, so just the private equity guys acquiring IT services firms, we saw $7 billion plus deals in the market. We saw Advent International acquire Encora. We saw KKR acquire Insona. We saw I-Squared Capital acquire Keo Networks. So just a ton of activity. And of course, Asia continues to be pretty active in this activity as well. So it was healthy, certainly for the market. I think we'll continue to see that continue in 2022 as well.
So Steve, let's close out with our forecast. Even with the headwinds that we've just been talking about, we're still forecasting 5.1% growth for managed services, which is actually double what the industry has averaged over the past 10 years. And we're forecasting 20% growth in as a service.
Yeah, it's interesting because I think our forecast is a little bit conservative in some people's eyes. But I think we just believe it's going to really be tough to match the 2021 numbers. There were so many factors, as you know, that came together to have this record year. There was pent-up demand. There was increased digital transformation across all organizations. There was accelerated cloud spend. So I think we're projecting a strong year because I think many of those factors are going to carry over. But again, it's almost double the normal rate for the industry at 5.1. We're used to a managed services business at growing at 2 to 2.5%, annually per year. So our pipeline continues to look really strong. So even though I think we may be a bit conservative, I like where we are right now, and I like the strength of the market.
Awesome. Thanks, Steve, and look forward to a fantastic 2022.
For more details, please visit the ISG Index page on our website, www.isg-1.com.